So what I tend to do every week is I go through this whole PowerPoint just so I can bring people up to speed. But I think that those who've like come for the past like couple of weeks know what speed that we're referring to. So it's better now that we just kind of look at some of the trades or any type of investments that we've made in the past quarter. You know, we're in the second quarter of 2021. So, a lot of things might have changed from, the beginning of the year until now. Like the housing market hasn't really changed because there's still a boom. Well, at least it's a seller's market. So people are really trying to, gobble up whatever homes that are around. Um, we also know that energy has changed, so that it's not just oil, but it's also electric, and that there's an infrastructure bill that's being passed and ready to be for to see a change in America to really speed up and catch up with the rest of the world. And then we've also seen a nice boom in biotechnology. So a lot of biotech stocks tend to run and tend to move during these times, right? Because now that the interest rates are so low, it does affect almost every industry, including biotechnology, if vaccines are involved, right? So, as opposed to going through everything, as opposed to welcome Angie, eh, as opposed to going through every little PowerPoint that I've had just to bring people up to speed, I don't want to do that. I just want to go over your trades. What did you trade last quarter that you have questions on that you feel like you need some clarity in making your trades better, and then not only making your trades better, but finding an opportunity to um, find better trades, to find better setups, so that you can, be profitable, because that's what we want. We have this strategy to ensure that that you're protected on the downside and only incurring upside potential. So, with that being said, let's review. Let's review what we have. Right? Um, Does anybody want to start off first? Because I can always talk, but it's better that you share your feelings about your investments, your trades, so that we can all learn. All right. So I guess I'll start, right? So um, I know I usually keep a separate watch list for the stocks that I've traded in the past months. As you can see, this is a whole list right here. If you can see the screen. So I saved this watch list, and this goes back until last year, April 2020, and it gives you an insight on what is it that you're looking at and why you were looking at it from the past, right? And that's how you can tell if things have kind of changed, either in your mindset or in the stock market. So in doing so, I there's two particular trades that I guess I'll kind of go over, that I did really well on one and then didn't do as well on the other. The very first one, I think that was in March, last month. Seemed like March was so far along, right? So that was, shoot, I'm trying to remember, what was it? Was it G? I'll go over the bad one. The first one was the bad one. I think that was it Gamble? Angie, do you remember which one it was? Because I have no
Was
idea.
it
I can't even remember
it,
now.
yes, it was CLSK.
Hold on, is my volume low? Yes.
It's the first one.
That's why. That's why I couldn't hear y'all. My volume was low. Say that again.
CLSK.
Ah, yes, CLSK. Correct. So CLSK. This CLSK was the bad trade that I made, and I tend to harp on the bad trades than the good ones. I don't really care to share how much I made on the good one, even though I probably should. Um, but I like to focus on the bad ones because that's where more education is really garnered, right? So with CLSK, this is an energy stock that's actually in electron electric vehicles. It deals with more on the Bitcoin side of things. So I figured that I would buy this one because it during the time it had a really good chart. As I pull up the contract that I had on it, give me 1 second. This was back in March. So I had the CLSK contract, options contract, because I do trade options, right? I think most of us do on here. This is for Michelle because I know she hasn't been on before. But so with CLSK, and I'll show you the options chart. So in options, and you can see that where I bought and sold, and this is why I like Thinkorswim, right? Hopefully you can see the chart that I'm referring to. Um, that I bought this a couple of times, right? The very first time that I bought it, it first off, it's below the 200 SMA price, right? And that's the biggest thing. We want to make sure that not only is it trading above the 200 SMA to get that upside momentum, but that it also closed above the 200 SMA. So here I try to get in early, right? Thinking that we would have some upside. But we didn't because the contract price, which was the $40 calls that was going to expire back in March 19th, it was finding some upside pressure. And this is how we can use the options contracts to compare to the stock price. Because when the options contract and the stock price kind of match each other, you can see if a stock is being overbought or oversold by using your technical indicators. The RSI will let you know if it's oversold on the bottom or overbought on top, right? So here, this was back on February 16th first, like the first time. I bought it and then I was like, I'm going to hold, right? Because, holding sometimes is good, right? And I didn't hold. I got kind of like shaken out, right? And I got shaken out at this 11 a.m. hour. And if I use the time frame, right, this is 1 hour. Each candlestick represents 1 hour. I should have said that. That's orienting ourselves on the chart. Each candlestick represents 1 hour. The red line is a 200 SMA. The green line is the 5 EMA, which is also a very important indicator. And then the teal line is a 20 SMA, right? And then we have the MACD and the RSI and the TTM squeeze underneath it, right? So on this hour candlestick, if I was more diligent with my studies, I would have seen that, that there was support here at this $2 area, right? So even though that I bought a couple of contracts here at $3.30, there was $1.30 of downside, right? So first off, identifying support would have saved me downside risk, right? Because now I am almost $1.30 on downside, thinking that hey, it's going to go to four. This was what 430, and that's only $1 of upside. So when you think of risk reward, the one risk reward really was more of a 1.3 to 1 risk reward. So I wasn't really getting any type of reward on the upside. So first off, identifying support. I know Angie, and welcome Keisha. We're just going over old trades that we did in the past quarter. So if I identify the past support, and I know Angie, you asked about identifying support and how you can do that, and it's really identifying where that base price was starting to on the long term, right? So long term, we see that $2 was being held right around here,
Mhm.
and then $2 is being held right around here.
Got it.
right? So we can say in general, like $2, right? It's not an exact price because we know that maybe the price will dip to $1.98, like it did right around here, even though it's still holding $2.
Mm-hmm.
This is where this candlestick, identifying the candlesticks help, right? So now that we identified or established what support is, and we see that this 200 SMA price does kind of act like resistance, right? So we know that, hey, it has an opportunity to go to this 200 SMA price, but it also can get smacked back down, which it
Yeah.
did. So as the price got smacked back down because of the overhead resistance, it came to support, but it was starting to consolidate sideways as it came to support. This is key. Why is it key? Is that if we zoom in, we'll see that, each hour the price continued to go towards the 200 SMA price. So now we're all starting to consolidate towards this 200 SMA, right? And when you have all three moving averages consolidating together on the upside, this is where we can identify that there might be a breakout. And it kind of tried doing it here, right? This is a bullish engulfing pattern that typically works, but the only reason why it didn't work here is because the other two moving averages, only one of them came above the 200 SMA price. And we need both moving averages, the 5 and the 20 moving average, to cross over the 200 SMA price in order for that breakout to happen. That didn't happen here. Um, we got pullback. That resistance started to happen on that day as I zoomed out. Um, and this day was February 18th. Now, mind you, yes, I did buy some and I did continue to hold, but because I held into February 22nd on this contract, I was still losing, right? I bought more here at this 480 price. And at 480, if I identified that both the moving averages were above the 200 SMA price, then I would have more opportunity for it to go up. But because I was trying to hold, not only did I lose once, it coming when the first time when it pulled back after being rejected at the 200 SMA price, but also when it started to spike and found that resistance here coming into the morning when they started to sell off shares. I believe it was on this day, February 9th. And then we can always go back into the news and find that out. But the very first thing was identifying where are the moving averages and where is the stock price. Because without those two things, the stock can go lower. And we'll go back to the stock price chart. Let me share this real quick. So when we go back to the stock price chart, and I know this was back in February, um, as I thought I was getting the March contract, but I know that CLSK was a difficult trade just because of how Bitcoin was moving at the time with a lot of volatility. So right around here, this is the 8th, right? And then the 9th, and then 10th, right? So right around here, around the 8th is when I bought. Typically, this would be a good buy. This would be a good purchase, right? Why I say that is because, if you're buying shares, not the options, because the options imply volatility is too high, which is why if you buy options, you should always buy when the volatility is low. So that was my next mistake. I bought when the volatility was high. And because the volatility was high, and even though this had this cross on the moving average, this cross on the MACD, um, the options contract wasn't showing that it had much upside because it was still below the 200 SMA price. And then coming into earnings, which was happening on the 12th, just a couple of days prior to, once it found that resistance on the options contract, I'll show you that again. Let's put put it on the day chart so you can really see. So this is the options contract. Each candlestick represents one day. So, oops, oh, I picked the wrong day. I'm so sorry. I was going, this is the 16th. Sorry, 16th, 17th, 18th. So as we were looking at the actual stock price chart, on the 16th, which was after earnings, I anticipated that there would be more upside, right? Because usually if they beat earnings or they do well, which they did, they actually beat earnings on this day, um, which was the 12th. I thought it was going to continue to go up. And like I said, you use the options contract to compare the stock price chart. The options contract here said that it was at resistance, which was the 200 SMA price, and it was going to pull back, which it did on the 19th, right? 18th, 19th, 20th, or 22nd, right? And then the 23rd. Um, we'll go back to the options contract so you can see. Yes, there's a lot of going back and forth when you're trading options. So we see here on the 18th, where I thought this strong green candlestick was going to continue to go up higher. It didn't. It found resistance. And you wouldn't have been able to see that the resistance was there only unless you went to the hour chart. And that hour chart shows that, yes, yeah, even though across the 200 SMA price, both moving averages have not crossed over the 200 SMA price. So this is going to drag down the price. Think of this price being too low, this price being too high. And because there's a discrepancy between the prices, the price has to pull back in order for there to be some type of balance, some type of agreement between the buyers and the sellers. And on this contract, the agreement was that the sellers was going to rule. And since they did, it dropped the price down. And because it dropped pulled the price down, I sold and lost on this. And this was my biggest loss of over $533. I think it was. It was 533. Yes, $533. So so that's why, if you're, even if you're not trading options and you really want to see if the stock price can go a little bit higher, maybe you use the options contract to compare to the stock price contract to see if it will pull back. And I know on the news itself back then, we'll go back to, yep, we'll go back to that February 12th time. So it was mentioning what it did during earnings, that it was up and that it beat earnings, right? There was what they received versus what happened in the last year, same quarter. It was -3 cents versus -37 cents. I understand they they reported a negative, but the negative still is a positive as far as reactions was concerned on the candlestick after earnings was released. But the news just pulled it down, and the sellers kind of pulled it down, um, which didn't make it any better, right? And I know this is dry. This is like really dry material, and it's kind of hard to like, well, I wouldn't have known that. But this is why going over the past trades really does help. It gives you an idea of what's happening. And they were under legal investigation too, right? So there was like security fraud claims. So sometimes that helps. It will help like certain companies like Apple, Google, or Facebook when they have some like legal scrutiny happening. But other cases, especially one that trades with Bitcoin, doesn't work out the same way. You get, sometimes it'll pull back, and as you can see, it continued to pull back after, after I even sold back on the 18th. It continued to pull, and it's not really going anywhere, and it's trading towards the 200 SMA price as a stock price, and might trade below it depending on, what the current news is. I don't know what the current news is, so I haven't really been following it after I sold. I guess it might have been, I feel like battered and bruised, so I just don't want to go back to it, so I leave it alone, right? And I'll go to something that I know that does work. Um, so that's what CLSK for me. Does anyone have a trade that they want to go over? And then we can go into positive trades after that.
Can we do KTOS,
Yes.
please?
KTOS, I know that Kathy Wood
Yes.
had brought KTOS into the fold for her ETF. So, let's. You want to walk us through it? Want to walk us through what you were seeing and where you bought at and where you exited at?
I prefer not not to walk through, please.
Say that again.
I said I would prefer not to walk through it.
Okay, no
I'm not
problem.
confident yet.
No
um,
problem. So, what do you remember what day you entered in
yes,
on this
actually on the
equity?
30th. So I entered it on the 30th. Um,
Okay. Okay. So on the 30th of March, right?
correct.
So, what I like about this chart is that not only that it still shows that there's some upside to it, but what happens, and I'm starting to see even my own technical strategies that when you have a strong green candlestick, they did it on March 29th, that sometimes the very next day will be a pullback.
Mm, okay.
Sometimes, and I only say sometimes mainly because if we look and break down the smaller time frames, we might see that this big green candlestick on the
Mm-hmm.
hour might, because each candlestick on this chart right now is showing that it's one day, but on the hour it might show that it's overbought. So if we shrink down into the smaller time frame, this is the 30th, this is the 29th. All right, so this is the 29th, and we see on the 29th right here, if we go to the RSI, it's overbought, right? So it's overbought, even though it's pre-market, because during this time it's pre-market. This time is after hours, right? It's the 29th, the market is closed and it's still trading in the after hours time frame.
Mm-hmm.
After our pre-market on the 30th, right?
Mm,
And on the 30th, but it's still overbought, right?
yeah.
So when the market opened on the 30th, it did pull back, right?
Mm-hmm.
It did pull back. So so you wouldn't see all of this, right? You would not have seen all of what's going on the 30th. You would just see what's happening on the 30th. So I'm going to move the screen to the day of the 30th,
Mm-hmm.
right? So towards the far right is when the market opened here, right? And then when the market opened, well, before it even opened, at this 9 p.m., 9 a.m. hour time frame, sorry, it pulled back.
Yeah.
And then when it pulled back, it was coming to the 20 SMA price. When it came to this 20 SMA, bounced there and then found some buying on this green candlestick, which is the 10 a.m. hour. We know this 10 a.m. hour is now combating resistance right here,
Mm-hmm.
right? Because this is where resistance is at this $29 area, right?
Yep.
So even though it pulled back once the market opened, it was bouncing. So it bounced from 2770 up to about close to 29. So
Mm-hmm.
now we have to think, where was previous resistance there, right? So when we go back into time, we'll see that there was 29 like right around here, 29 around here. But what happened during that time? It was trading below the 200 SMA price on the hour chart, right? So because it's trading below the 200 SMA price, um, it's going to have that upward resistance. So this is earnings, right? It came out with earnings, and then earnings it collapsed pre-market or after hours. That's what this gray shaded area is, and even the dotted line gives you the definitive between the after hours and pre-market, right? So we know what we're looking at. So when they came out with earnings and it said that they they actually was kind of in line with earnings. They made 8 cents a share, and Wall Street expected 7 cents, 0.073 cents a share, and they kind of was in line. They roughly beat it, but as we have known, this whole anything earnings season, most stocks will lose, right? Meaning that there will be some type of negative reaction. The price will come down so that big institutional buyers can buy in, and it will drive the price up higher. So maybe during this time, even Kathy Woods was probably buying as the stock was dropping lower and finding some support. But back to where the resistance was. The resistance was at 29. Current time, which was that March 30th time, you bought somewhere around there, anticipating a breakout,
Mhm.
right? If we go back just a little bit more, further back to the left, I'm referring to, we see that still 29. Well, that's 28 actually, which is holding. It's holding this 28 area, 28, 27 area. So we know that this is almost damn near previous support, right? It's trading there. It's at 28.12 right now. But previous resistance was right around here. So we even see that there's more resistance here. And there's still some resistance here. So it's still some resistance over here. Even though it's not exactly 29, it's kind of close. There's 29 resistance downward. We know that there's sellers there. So on the hour chart, it's showing us that there's so much downward resistance that maybe when we come to the market after 10 a.m., if it crosses over 29, then there'll be more upside. It didn't do that. Well, it did do that. I'm sorry, because the next thing that we have to think about is that if the candlestick closes above the 5 EMA price, it should go up higher, which it did. It retested the previous resistance at 29.5, right? And I think back here we saw 29.6 as a resistance area price if we went further back that way. But we'll use this time, which was in the after hours, which as resistance, 29.5, $29.05, 50 cents. We go a little bit further, we see the strong red candlestick, and it's almost closing at the 5 EMA price. This will give me worry, right? This type of candlestick closing at the 5 EMA price or slightly under the 5 EMA price gives me worry because it tells me that there's some weakness that's coming in. And if we look at the MACD, we still see that it's trading sideways, but we also do see that the RSI is coming down lower, right? It's coming towards that 50, which is mid-range, right? When it starts trading at 50, the potential of it going down to 40 and then 30 is almost inevitable. And then that's what we see the next hour is that there's a stronger red candlestick that wants to go down further. Um, but we still didn't see a cross in the moving averages, but we did see a cross in the MACD,
Mhm.
which that cross in the MACD usually signals that there's a shift in the momentum. And that's where this whole hour chart comes from, or that we have to tune into. So, yes, the next hour, which was at 2 p.m., was a green candlestick trying to show some basing here at 28, but the next candlestick was red.
Yeah.
And that red engulfs the green, and the previous red also engulfed the green. And this engulfing
Mhm.
tends to show that there might be downside, right? But this holding, and it held, but it just didn't cross back over the the 5 EMA didn't cross back over to 20 SMA. So finding that there's some support here. Do you know the stock price that you bought at when you bought at 10 a.m.?
Yes, give me 1 second. It was the option was,
Say that again.
so it was, the option was for 90 cents a contract.
Oh, nice. Shoot. Do you remember what? Because I'm not going to get those the March contracts. I'm not going to have that show up on my options contract. But what we could do is go to the on-demand section and pull that up and allow that to load, and then maybe they'll show us. This is the beauty of on-demand, right? This was March 30th. And give this a chance to load.
It's 32.50 a fall. Until for 16, and the price was 90 cents per contract.
I'm waiting for it to all load up. It's still buffering. Yay! Nope, not showing me March. Not showing me March contracts. That's probably.
Okay. Oh, you got happy.
It's still.
Oh, okay, got it. All
but
right.
we are on March. Yeah, we are in March. Right. This is what this is saying right now. This is what happened in March. So I can't pull up the contract, but at least you can see, the price action. We all can see the price action actually. But you said you bought the March. You said you bought the April 16th contracts.
Correct. Exactly.
And do you remember what the delta was on that contract?
When I purchased it?
Yes.
Hold on.
Because what happened is that, and I know I probably didn't mention this before, when we trade any stock, we should take some type of notes on it. And I have, even me personally, I've been kind of slacking on the effective note taking. But we should at least know like the day that we entered, the day that we exited, like the prices associated with that. And then, why, what was the whole main reasoning on their entry? Like how you were even feeling when you entered, right? Did you feel like this rush, a wave of emotions before you entered the stock price? So those are, or did you not, right? You were just like, oh, this is a very calculated thing. It hit my buy signal, I bought. I saw my second sell signal, I sold. Kind of maneuvering, right? So we can always come back and reflect on the why we bought. So that would be something too. But to even, we see, and now let me push it back to that.
The March 30th delta, I have it down. Actually.
You said March 30th for Delta?
But you were looking for the delta, right? On that.
Yes. Contract? Yes, the delta, because it's not going to show me those contracts, unfortunately.
Okay, I think I have the delta here, and it was so it's,
and the delta waivers too. It waivers too when you, like, after you buy it, and there's buying and selling of the equity. It's going to like increase and decrease throughout the trading day.
Yeah, I thought I had it in my notes, but I don't. Yeah, I have what it is now because for some reason I'm still holding it. I wanted to hold it just to see like if anything changed during that, the contract ends on the 16th, so.
Mm,
Mhm.
got you. Got you. Got you. As
But
far
today
as, which makes sense.
0.0155. But it changes every day, as we say.
You say it's
0.0155.
that's the delta?
Correct.
0.0?
No, sorry, 0.0155.
So that seems very low, right? We
Yeah.
want a delta of, I would say 50. Some people say 30, but I say 50 just because the delta gives you a better chance. Because the delta is really saying the percentage chance that you have for this stock to go to the strike price that you have, right? That's what the delta is. The delta is that percentage, like that probability that it can go to. What is your strike price?
The strike price was 32.50.
32.50. So 32.50. It's at 28.12 right now. 32.50. So 32 would be somewhere just above resistance. So back on this chart, we're not back on in March. We're trying to figure out your options contract for before it expires. Will it actually expire in the money, essentially, right? That's what we want to know. So it has to come up to this 32 area, which is resistance here, but it also has resistance here, right? At closely $30, maybe even $30.50, but definitely around this $30.25, right? Because we see the resistance here, here, here. It kind of broke up a little bit over here, kind of tried to do the same thing over here, but it definitely, there's resistance there. There's resistance here, like, and that resistance price is just saying, like, there's some short sellers that refuse to believe that KTOS can pass this point of $30, and then tried it here, tried testing it. So it's going to continue to try testing it, but that delta for that contract, I don't know how much, it's actually going to get there just because of that delta itself.
Are you referring to the initial contract? That because this is as of today.
Yeah, as of today, that delta is really low.
Got it.
Yeah, because that's what you want, that delta to be as high as possible. Hopefully, let me see if maybe I can figure out how to get KTOS. You said you bought
the 30th.
What was it?
30th? You're talking about the date?
Yeah.
Yeah, the 30th.
So 30. You bought it on the 30th, but it would expire. When does it expire?
On the 16th.
16th, April 16th?
Correct.
Why I keep on thinking March? I'm bugging. I'm so sorry. I was thinking totally March. So you said 25, $32.50. So as we can see, I like, I don't mind the fact that it's, the bid is 0 and it was 5 cents on the ask. But when we go to like the delta, right? This delta is 18. That's pretty tough. Hold up, wait, I'm sorry. It's 0.03. Sorry. I was looking at the wrong one, looking at the one above. 0.03. That's really low, right? That means that there's a 97% chance that this contract will not expire in the money, which is this darker blue area, right? So, and that's what you want it to be in here.
Oh, yeah. Okay.
And then another thing was the actual liquidity of the contract, where you have the volume. There's only 73 participants, right, or that wanted to buy the options. Even though the open interest is huge,
Mm.
there isn't a lot of volume there. Um, and if we take the options contract to an actual chart, we can see that the contract is just like is being diminished,
Mm-hmm.
right, from where it was up here. And I'm not saying that there isn't a chance, like anything can happen during the week. Um, like anything literally could happen. But right now, the way that this contract is suggesting, if you look at the numbers,
Mm-hmm.
is saying that it's not, it can't overcome that 97% chance. Technically, we look at just the pure technicals. I'm looking at the daily chart. Each candlestick represents one day. We're going to go to the hour chart. And on the hour chart, we expand it all out. We see that this purple line, this is the theoretical price of the options contract, right? This is the price that people believe the option is worth. They are all believing that it's only worth 5 cents right now, right?
Mm-hmm.
So the opportunity for it, even though the moving averages have all come together, right? We have the 5 EMA, which is at 3 cents. We have the 20 SMA, which is at 6 cents. It closed at 4 cents, and everyone believes it's worth 5 cents.
Mm.
Like, it's kind of hard to really suggest that it's going to come up to like 92 cents or even $1, just because of all that downside momentum. And we have 5 days before expiration.
Mm-hmm.
So this one would be really, really tough. Now, if we had maybe another couple of weeks, then maybe the opportunity for it to even get to $1 might be there. But this might expire worthless,
Mm-hmm.
unfortunately.
Mm-hmm.
And if we look at the TTM squeeze too, we see that all the histograms are below the zero line, and we need them above the zero line. So maybe tomorrow, Monday, Tuesday, Wednesday, we get some volume, because that's all it needs. It just needs some volume. But right now, it's saying that there isn't enough volume, and there might be some more selling because of the zero line is red dots and the histograms are yellow.
Mm-hmm.
So hopefully did that give any type of clarity?
Yes, absolutely. Like down to the delta, down to, understanding that it needs to be at least over 50. The TTM squeeze all are below the histogram, so that also makes sense. So thank you.
Absolutely. Absolutely. And it's hard to see the whole picture. There's times that I'll get into a position, it's like, man, I missed that part. Like I totally overlooked that. Like I, overlooked the volume. That's happened, right? Where I overlooked the volume and don't even recognize that. I did that recently with, which one did I do that with? This month, this past month. I recently did that with not ASL, which was a good trade. I think it was it not Leaf? Huh. I think it was CRMD, I believe it was. Right, their options contract doesn't have a lot of volume behind it. Right, 11, 14, 17. Like even though the open interest was not even that big either, like CRMD didn't have much volume, so there was no reason for me to even buy the contract if there's no volume. You need active participants and a good delta, right? Once we have those, like even though it's 37, that's cool, that's great, but there's no volume behind it on one out of the money. In the money, 71, that should expire in the money as a contract. Um, but there's only 11, the volume is 11. So I don't know, that's on the call side. This is calling up the price. So, versus the put side, which is putting down the price, which makes sense. Um, does anybody have another trade that they want to go over?
I have a question.
Yeah.
So, it's just been major pullbacks for the last couple of months or so. And there have been a lot of stocks that I guess historically have been very strong, but just have been consolidating and steadily pulling back. How do you determine your contract lengths or your expiration dates rather? How do you determine that? I mean, not wanting to go too far, but still not wanting to cut yourself too short where you're losing money consistently, which is kind of, I think, what I'm doing here. Because sometimes I look at a chart and I see where it's consolidating and I just don't know how to gauge it. And I know you go by your catalyst and everything, but sometimes it doesn't take catalyst either for it to move.
True. Sometimes a stock will just be sitting there, not doing what you like expected or anticipating it to do. I went on to GNLN because that was one that kind of did that to me, where I knew I think I bought on this day. I think I bought the contract. Yeah, I bought the contract. Let me pull it up. I should pull it up. But just to really answer your question, is trying to identify where you are in the rhythm and the flow of the actual chart, right? Because you might, even though a stock might have something positive to say about it, about whatever that they're doing, they might be trading below the 200 SMA price. And we know that once it's trading below the 200 SMA price, like RMO, right? RMO, they were doing something happened in their background. I don't know. I really didn't even get a chance to even look at anything. The biggest thing that I saw was that it's trading below the 200 SMA price. It's going to come back, right? And I think I mentioned in the group that look at it when it's at 11, then look at it when it's at 1050, because even though it spiked up to like I think $13 on the day, it was still below the 200 SMA price, right? So yeah, that's what happened here. This was on Tuesday of last week, the 6th. You see how everything's below the 200 SMA price, this red line. And the moving averages is still below the 200 SMA price. So even though it might have had some good movement, some good momentum, by the time, if you weren't in this already, right, after hearing the earnings or whatever and seeing the consolidation, once you see the consolidation, you should start looking at, okay, well, where is real support? And once you find out where the support is, you're saying, okay, well, the support right here is suggesting $8.20, maybe 30 cents. Maybe I should watch that and wait for that strong spike that it might have. And it had this strong spike during the pre-market. So during the pre-market, you can look like, oh, okay, well, what's its news? And then from there, take it from, oh, is it trading above the 5 EMA? And identifying where your downside risk in relation to that 5 EMA price. Because that 5 EMA price is really, even though it might close that whatever time frame that you're on, it might close above the 5 EMA price. But at the same time, um, it can still, find some resistance, which it did, right? And it found that the RSI was way overbought. And even though it ran the whole day, if you didn't buy prior to, and in relation to the downside risk with it, whatever that 5 EMA price is at that time, that can save you from any downside risk. So let's say that on this day when the market opened, we bought at $8.90, right? Um, it closed above the 5 EMA price. Understanding that, it's overbought now. You need to start recognizing when to sell, right? Um, and if we go to the contracts, which on April, well, first off, let's look at the contracts. Let's see, you see how the volume is so much bigger here? We have 6,000, 19,000 is the open interest. Even though it's out of the money, we still have some volume. So it gives us some chance for some upside. In the money, yes, it might start dwindling, especially as the contract is coming to expiration. So they already knew, hey, this is going to expire in the money. I can just take my money now and then go somewhere else. But also, you going too far deep, like you asked, you don't want to go too far out, right? You want to know, you can't really call the future. I can't call the future on these. So typically, if like entering into this week, I know I'm not buying any April 16th expiration contracts only unless I'm doing a day trade, right? And the volume is there. Other than that, I'm looking at May. So I'll be looking at May contracts for any stock that I'm heading into this upcoming week. Because I know at least I have some time to hold this stock, right? I have some time to say, okay, well, at least I bought near support. And because I bought near support, I have some time. Maybe it might pull back one day and I can handle that pullback and just wait for just the bounce to go higher, right? If we look at the volume, right? No, I'm not the volume. The price assessment for May, you see for Romeo, we have 53, right? On the delta. The delta is important there. So because we have 53 as a delta, we have more of an opportunity for it to expire in the money by time May 21st comes around, because that's what we want. Hopefully, am I answering your question at all, Keisha?
Yes, thank you. Um, there's one stock that I had high hopes for. I'm sure I'm gonna lose money because my expiration is on Friday, but can you look at it for me?
Yes, ma'am. Please, by all means. I love
It's
it.
it's the ET.
ET, energy transfer. Why does it
Yes.
feel so familiar? Okay. So, all right. So I like the chart set up already. Obviously, I already drew in line, so I must have seen this before. So you're moving in a good path already. So let's dive in. What option contract did you buy? You say it was April?
I'm sorry, I was on mute. The one
Okay.
I have is for May 21st, and I have a $10 call on it.
All right. So first off, it's in May. $10 call. So at least you
Yeah.
have some time. You have a month time for this to go to your projected to a projected price. Right? I think I'm sorry. What happened? Thank you, Michelle, for coming by. Greatly appreciate you. Thank you. Thank you. Um, and yes, please always invite your friends if they're trying to learn a little bit more, because we are really diving in. This is like, okay, when you're making a trade and what strategy to employ. So that's always helpful. But as we look at the May 21st contract, we see that there's a delta of 8 already, right? So in the next 40 days before expiration, we still have an 8% chance of it expiring in the money. That's
That's bad.
right. Yeah. It's okay though, right? We might have something to back it up with, right? Because we see that there is still some volume, and the volume is very key, right? We have 1,300 and 2,300 roughly on open interest. So the volume is good here, right? It's trading tightly between 4 and 5 cents, right? So
Okay.
let's move this contract to the actual chart so we can see what it looks like on the chart. Let me share the chart.
And you're using Thinkorswim. Is this what you're using right now?
Yes. So
Okay.
so on the chart itself, let's put the stock price chart back up. On the options contract itself, um, first and foremost, right? Everyone thinks already that the theoretical price for this option contract is 8 cents, right? So depending on where you bought it, if you bought it below 8 cents, you're in a good path for this options contract, right? So did you buy it below
Okay.
8 cents?
Let me check really. Um, it it said average cost 11 cents.
11 cents. Okay.
Yeah.
All right. So not bad. Not it's not horrible, right? Well, let's. I'm trying not to color it, right? So we can really get an idea of where we are. All right.
Okay.
So always the best thing is to make sure if you're buying below the theoretical price, right? So that'll be the next thing. When we see that where the theoretical price is in relation to what the option contract is going for, we always want to make sure that we buy underneath there. So if you bought at 4 or 5 cents would be good. But when we're looking at the MACD for this option contract, we still need. It still looks like there's going to be some type of selling happening, right? Right, because the MACD is trading below the zero line, and these lines, I still don't even know what to call them actually, but we know that these lines need to cross, right, in order to
Right.
show that there's a shift in momentum.
Right.
Right? So that hasn't happened yet. It already made its low. It made a 3 cent low, so I don't anticipate it going to make another low, but I would anticipate this trading sideways a little bit. Um, so let's just go to the hour chart next. And on the hour chart, we do see that they're showing that the squeeze is a little bit of buying happening here, and the RSI is not oversold. That the MACD is showing that there is that the buying that happened last week or Friday. Yeah, this is all the 9th, 7th, 8th. Yeah, that there is some buying that's been happening. So it might be going up a little bit. On the hour chart, it's still showing that by the hour, the theoretical price is 5 cents, right? And so it went from 8 cents to 5 cents on the hour. And then now if we go down to, we're just going to smaller time frames to really see where we are. On the smaller time frame, we see 5 cents as well. This is 2 minutes. Every candlestick represents 2 minutes. Um, so we've seen that the theoretical price is 5 cents. And we're also seeing that there was some selling that was happening going into the close, right? So the biggest thing that we want to see when the market opens on at 9:30 on Monday is that these histograms on the minute chart actually turn to yellow histograms, but maintaining the green dots on the x-axis, right? If it maintains the green dots and it starts turning yellow, then we know that okay, there's some buying happening, right? It might be small, incremental, but at least it's something, and that can help your cause going into the expiration of this contract. Um, Now, if we look at the actual stock price chart, the stock price chart, which I absolutely like right here, is that we're seeing that the moving averages are about to cross, right? It closed above the 5 EMA. That's one that on this day. Right? So This is Friday, right? It closed above the 5 EMA and even above the 20 SMA. What was the 20 SMA price? 792. The 5 EMA price was $7.90. So these are good signs. It closed at $8.40. So those are good signs. The next sign that we need to have is that on Monday, when the stock market closes, that this MACD has some type of cross. And then also these yellow histograms start getting smaller. Also, we see that this teal line is you probably can't see it all too well, but the teal line is below the this purple line. So the teal line is the implied volatility. The historical is the purple line. This is always a good sign if the implied volatility is below the historical, right? Because now you're getting it at a lower, you're getting the contract at a lower price.
Yeah.
Right?
Is that like that? Let me see. That implied volatility section, is that kind of like those two lines? Is that kind of like the Bollinger Bands or something?
Not at all.
Oh, okay.
Those are the Bollinger Bands give you like almost a price range, where the stock might be, depending on like I don't use the Bollinger Bands like that, but I know that's its major concept is that it gives you a range. Like it could be a 50-cent range, it could be a dollar range, but it gives you a range of where this price could be.
Got it.
The implied volatility and the historical volatility, this tells you the actual volatility of the underlying price, meaning that yes, within that range, it might be above or below whatever that range might be in the Bollinger Band. But as far as a contract is concerned, the volatility of that contract is going to be whatever they say it should be. And you want it to be low before you enter, and you want to sell it when it's high. And it looks like it's starting to go up, right? It crossed over the historical. So to me right now, these 40 days that you have with your contract looks like it has an opportunity to go higher. So even though, what did we say, an 8% chance right now or something like that?
Yes,
it might increase. It might increase. So I would say just continue following the news and just see what it might go to. Let's look at the news. Let's see what the news is saying actually. Because it's all energy, and energy for me it's a riskier sector just because it deals with OPEC, and that's where some like CLSK, even though it might be crypto, it's related to energy. So that's why that's why I end up losing, because I know how energy doesn't really fare well with me. But and that's me, because I'm nervous around energy because of OPEC plus. I don't know what's going to happen. But we do know that energy does have some upside if you're patient. So and I lack my patience most times. So we're seeing that it says shares of several energy companies are trading higher amid the OPEC plus meetings on supply cuts. So this was back last month. So that would probably have been a good reason why to even buy. This company still said the same thing the next day. Um, Even gave something on Wall Street Bets. Is that how you found? Did you find this on Wall Street Bets at all?
No, I was in another chat and it boomed one week, well, for a couple of days, and it moved really well, and then all of a sudden it was like massive pullback from everything, on most stocks, and I just kind of got the short end of that deal.
It probably boomed because of this earnings, right? Back in February, they had some really good earnings. And that's why I harp on earnings so much, because earnings tells you what to buy, right? And that's what happened, right? They came out with some earnings. They didn't beat the estimates. They got 19 cents and the estimate said 25 cents. But the reaction to earnings was still positive, right? And that's what we want to have, the reaction to earnings.
Right.
So if you got in after earnings, like right around here or here, you would have been good. This day, you want to be in. And the reason why I say you want to be in before that, right, let's say I didn't even know that earnings was coming up, right? Here, when you have a green candlestick like this that traded above the 5 EMA and both moving averages are above the 200 SMA, this is almost a breakout pattern, right? Because it's testing the previous red resistance. It's testing this red resistance that's right before, right before this red resistance, right? Um, so think of it as that way, right? Where a resistance is being tested and all you want to see is the break. And if you were to bought in like at $7.10 because of that breakout, then you would have been able to, really be able to enjoy this upside move, right? Because that's all it is. It's more technical than anything. The earnings really didn't say anything, even though I had gave some dividends, 15 cents a share. The technical pattern really shows that it's going to retest the previous resistance, and that it did. It broke that previous resistance and went high, and then higher, higher. It's overbought now, right? So when it starts getting overbought, this is when we're thinking to sell,
Right.
thinking buying here. This is not buying time, because whoever has this position from here, they're selling their position up here.
Right.
They're thinking, okay, now it's time to sell. And if they see any type of pullback, like a red candlestick like this, it's like, all right, well, I need to start thinking, do I need to sell now? And maybe they did sell. Yep. See? And the reason why I was thinking, okay, maybe you should sell is because when you have a wick like this is almost like an indecision candlestick pattern, where after a strong green candle, after strong green days, and it's overbought, the stock doesn't know what it wants to do. It's like, what should I do next? And because of this wick, this is a strong body, that's one. And this is a long wick, that's two. The opportunity for it to come back to the 5 EMA is present. And not only come back to the 5 EMA, but close below the 5 EMA, which it did on this day. But it's no longer overbought. It pulled back. You see that even the TTM squeeze kind of got a darker blue. So we know that the buying has kind of slowed down, even though it's still there. This is another opportunity for a breakout. It's not overbought, but we're still seeing weakness, right? So now we have to start thinking, is it going to consolidate? And I think this goes back into the meat of your question. When do I know if I'm buying either at the right time or if I'm holding it too long? Um, you know, this is it consolidating? It looks like it's trying to consolidate because it started to close below this 5 EMA. Once I start seeing it closing below the 5 EMA, I am now watching to see if it's going to go lower. And it might just trade with it. This candlestick right here, I would have been scared out already. And then the momentum is starting to weak down, it's starting to get weaker. So that's another thing. So even though it did retest and went higher, I would have been out already. I can't call the high because once it's overbought, I'm like, it's overbought. Let me just take my profits now, wait for it to pull back. I've probably mentioned it many times in the chat. I've left money on the table. Last week, I left at least a good $800 on the table, but I took in almost $1,200 on the trade. So it wasn't like, okay, I called the top. I still would take profits. And that's the most important part, right? Because we don't know where it's going to go. This was resistance, kind of spiked, but it still was pulling back and finding the other moving average. And now it's crossing below the 5 EMA, testing support here at 776. And once it starts trading below the 5 EMA, it's going to do this whole consolidation, which is what you're saying. So, in the Wyckoff method, says, even in the Crystal Rush, not even Crystal, I forgot her last name. Crystal Renee, I follow her on Instagram. When she describes this pattern, you know, one being below the 200 SMA and then trading, this is the whole consolidation. When she'll mention that, you know, you'll have the consolidation, then you will have the accumulation. And then with the accumulation, you have more consolidation and then a decline. This accumulation is going to happen, but it's still trading above the 200 SMA price. That's probably most important right now because it's holding support at 780. Would I sell this? No, I would not sell this. I would hold it. And I will hold it until that contract, even though it's 8% chance of expiring in the money by the time May comes, we're halfway through April. Not even. This week will be halfway through. So it might possibly be. It's not the best contract. I think you could have probably picked a better contract, but at least you have time. From 11 cents to, what did we say? What was that? 5 cents, 4 cents? Yeah, 4.5 cents or 0.045 cents. At least you have time. You're only down 6 cents a share or a contract. So give it some time. But if you do start seeing the contract really getting thinner and thinner and testing 3 cents, then maybe it's not going to do what the contract is going to do.
Thank you so much.
Absolutely. Do you have any questions about that?
No, just trying to take it all in. It's just so much to watch at one time. It's like so many variables, so many factors to monitor.
Absolutely. Options is not an easy game, right? People who have been in it for a long time, they make it sound easy, but for you to do it yourself, it's not easy. There's a lot of math behind. You know, there's a lot of math. There's a lot of looking behind it, right? Does this make sense in the long run? Type of mindset. So you have to put in that mindset of like, well, long term, you know, where am I in the chart, and does this make sense when May comes? To me, I think May comes, and people are going to be traveling a lot more. People are going to be moving around a lot more with their cars or planes and stuff like that. So it would make sense that summertime, more heat, more travel, energy play might be something in play, especially that the infrastructure bill is going to move along because the Democrats are going to definitely push it through. So I think that, you know, you have a sensible play. It is probably a better entry that might have been for you.
Right. Thanks.
Absolutely. Any other stocks that anyone has an idea of? I know I want to be mindful of people's time. It's 8:16 right now, but I could still plug away for at least another 45 minutes.
What scanner do you use to find your option plays?
So it's not, I don't use a particular scanner for the options itself. What I do use is this, right? I use the regular scanner that I use just to find the stock itself. I already plugged and went through this already. Like this search results of the stocks was from Friday's close. And so it came up with 40 different stocks. Let me just show you, right? What I'll do is I usually just send it as a watch list. And what I do is I'll plug through each one of them where, did I delete it already? No, Friday close scan. There we go. So, and as you can tell, I highlighted the ones that I thought that were good, right? And the reason, and that's how I filter out which stocks I should actually zoom in on and give it some type of awareness, some type of credence, right? So when I zoom in on it and I try to figure out, well, who's, so like, let's go one by one, right? So CLSE or CLC, it's already overbought. I don't want a part of it. I'm moving on, right? REPX is below the 200 SMA. I don't want any parts of it. BTX, it's low, right? It doesn't have any options, right? That's first and foremost. So like here, you can tell it doesn't have any options because the implied volatility doesn't show up, only the historical. So because it doesn't have any options, then I'm like, oh, do I want to buy the shares or do I want to buy the options? I am highlighting this because I like the technical pattern. The technical pattern, I want to see what it does, right? If it's trading above the 200 SMA, which it is, and does it engulf the previous red day, which it does, maybe it goes higher. I don't have to trade it just because it's moving. I just want to watch it just to see if my theory is correct, right? So the more times I see my theory being played out, the more chances I can say that, okay, that this strategy has some type of prudency behind it. It does have some type of goodwill, good intention, right? And even the RSI is pretty low. It's just crossing 50. It's at 52. And the MACD cross and is trying to come to the zero line. Maybe there might be some pullback. There's still some selling involved, right? So I'm not going to want to buy this off right, but I know that I want to watch it because of what I just said, right? Um, CG CGA is overbought. I don't want any parts of it. So I'm just going to go to the ones that I highlighted, and I already highlighted it and put it into into the watch list that I would be watching, right? And since of March 29th, I've been putting in these stocks in this little watch list so that I can kind of monitor them and see, like, even though I didn't trade it, like, what was I thinking about that stock? Like, I highlighted quite a few here, right? So I have an interest in the ones that are highlighted. And that's just me. That's just the way I approach it. Some people might write them down and say, okay, well, I'm going to write, like, for instance, what I was doing and I need to get back into doing, I'm going to show you, is really writing good notes, right? So as you can see here, well, let's go back to like January. Oh, that was back in November. Well, as you can see, I was writing a whole lot. I was writing like, this is good. This is good. This is good. And then it was starting to get thinner because I was just like, I'm tired of writing. I'm tired of writing. Right. Well, February didn't get thinner, but coming in towards the end of February, it was like, okay, let me just write down what I was holding, what positions I was selling, what was, and now what am I holding, right? And so that was my approach at first, but I was recognizing how much time do I really have to write down notes, and was I giving myself adequate time to write it down? So that's something that you can also really put into play. You know, where in your notes does it say, is it a buy, is it a sell, or do I just ignore it? So in the scanner, I had BBW come up. That's Build-A-Bear, right? And they have options. So as I'm looking at it, I'm like, oh, okay, well, they have options contract. And it looks like it wants to break out. It looks like it wants to, it's traded above this $8.75 area. It's above the 200 SMA. They came out with earnings. They spiked on earnings, but they kind of pulled back, but it's kind of near where that earnings price was before. Maybe this might be something to look at, right? It's coming back to prices where it was back in the 2017. So now I want to look at the options contract. What does it say in May, right? So in May, let me look at the volume first, the liquidity, right? So we see that the volume on the $10 calls outweighs what's going on the open interest, right? So this might give it some opportunity to go higher. Even though the volume is really low here, it's kind of close to the open interest. This is the $7.50 call, right? That's already in the money, right? You can possibly, you're in the money, you could possibly still make some money off of this contract, because 9 times out of 10, should it expire in the money by the time May 21st come? Possibly, right? We see that there's a 76% chance that it will end in the money. All right, 46% chance that the $10 calls will end in the money. All right, this is by May 21st. So what I would do from here is go to the options contract. So let's take first the one that's in the money, right? Just so we can do a comparison. And as we compare the in the money contract of BBW, which I still find funny to myself, it's 12. The open interest is $2.12, right? I'm not open interest. The theoretical price is $2.12. It closed at $1.90. It made a high of $2.04, right? We see across here. I can see it retesting this whole price, this $2.12, and going maybe a little bit higher. Let's go into the smaller time frames, the hour time frame. The hour time frame says that $2.18 is, still the theoretical price. So it might still go up to that, but we know it's not overbought. The reason why I say bought, but I think of that volume. That volume is still really low. So the chances that it could pull back is there. The chances that it can go up is there. I don't know. I'm not really secure in that low volume. So maybe I say, you know what? Let me look at the other contract. Let me see what the other contract says. So the other contract that had more volume, right? Even though the delta was a little bit lower, and the price was a little bit lower too, right? Let's see. Well, let me just double check the volume, right? Because that's something you always have to do. Even though, and I caught myself with this past week. I wanted to buy one stock, but I ended up buying another one because I didn't, slow down just to look at which option contract chart I was looking at. So we're looking at, once again, now the $10 calls for BBW as opposed to $7.50 calls. So when we come back here and we see the $10 call, we see, wow, this is a little bit stronger here. There's a lot of volume for this contract, but it's people are thinking that it should be 96 cents. Does it have more room to go up higher if it's trading above its theoretical price? Maybe I don't want to buy this contract because it's trading above its theoretical price, and I might be paying more than what I should be. Right? So these are things that we try to discern from one contract to the next contract. Why am I even buying this one? What is it saying that is it saying that it can go up? Which is saying that it can, right? It's saying that it can. Actually $1.07 is the theoretical price. So it's still trading below it. The price, since it closed at $1, that's 7 cents. It's not overbought. The MACD then across. You see, it's like a whole process. Oh, this is the 4-hour chart. Let me go to the hour chart. Still a whole process, $1.07, $1.07. So it's still, below the theoretical price where it's trading. So this option contract might be something good on the smaller time frame. They're showing there's a lot of buying here that's happened. So I might want to buy this maybe for a simple day trade. Why? Or 2 days of trading. Why? Why I say day trade? Because it already made its high on the options contract. So I don't know how much higher it can go before it pulls back. Because that retracement is what we think about when we have strong green candlestick days, particularly on this first day. And when we go back to this to the stock price chart, right? The downside risk we think about is $8.18. So at any time it could still pull back. Even though it's up here, it could still pull back. Its supportive price should be around $8.30 because that's where the previous red candlestick is. And then if we look back even further, that's where these days are, around this $8.30. So could it pull back to that? Maybe. I don't know. But what I do know is that if I have a plan and say, well, downside risk is $8.18. It closed at $9. right now. So I have about 80, 90, 90s, no, 80, 82 cents of downside risk, right? Do I want to risk 82 cents on the stock price chart for it to possibly go a dollar? Because still 1 to 1 on the ratio. And I say a dollar because that was the previous resistance. Resistance here, not even the full $10, maybe $9.90 as resistance. So 90 cents upside, 88 cents downside. Maybe I might wait to see if it pulls back. Right? Made a new high. You already know how I feel about when a stock makes a new high and wants to pull back to its 200 SMA price. This might pull back to $8.74. So that's how I look at it when I break it down from time frame to time frame, from the day chart to the hour chart to the 2-minute chart. Does it have that pullback effect? And because it made this new high, that $8.74 might be that price that it'll pull back to. I don't know when it will do it or if it will really do it tomorrow, but I know that since it made its high, it has to pull back. So I might not even trade this at all. Like right now, I have no intentions of trading it, but I did put a marker there, so I'll know, hey, if it comes to $9.30, I know that it's breaking out and possibly make a new high before its earnings, because its earnings is in June, and there's usually a run up before earnings, so maybe it'll test that. Um, so I'll probably skip skip BBW and go to EARS, EARS. Would I? It's very flat, long term. Long term, this chart is so beat up, so downtrodden. It even had a reverse split back in April of 2019. These reverse splits, it means that they were just shrinking their float size. And their float size is 12 million. It traded 12 million on Friday. So once it's traded its float size and it's downbeaten like this, and it came out with earnings, maybe it had some upside, maybe it doesn't. You have to look at the short interest. But right now, it is testing resistance. And also, after hours, why I have this marked, is that after hours, it went higher, right? So would I want to trade this? Not yet. I would want the hour chart to pull back before. The price that it can pull back to is the 20 SMA price. So I would prefer that it pulls back to this 20 SMA price. I'm putting a mark at 520 because I want to see that it still has some strength behind it before that pullback. Because once it pulls back and comes to the 20 SMA price, it's trading above the 200 SMA price. Both moving averages are there. This might be a good price to get in at, somewhere just above the 20 SMA price. But as long as it's not overbought, then I can get in. But it's overbought right now, so I would skip it. But I'm still watching it just because I want to see. I like not only that it's a spike, but it consolidates and spikes. All right, spikes, consolidates, tries to spike, consolidates, spike, spike, consolidates a little bit, spike again, retrace. I guess it tried to make a new high here, didn't. It probably did. Oh, well, it was overbought. So because it was overbought, it pulled back, held support. That's key. Kind of holding support here again. That's also key. It's about $2 above support. But because it's $2 above support, it still has potential of going at least another $2 on the upside. Downside risk, $3.76 on the 5 EMA. That's about 50 cents. So I'm thinking 50 cents of downside risk if I were to buy here, right? But we know it's overbought, so I'm not buying on that. That's overbought on the hour chart. another $1.50 of downside risk because of support, right? But we have more upside. We have about $2 worth of upside, maybe actually I should say more of $1. Let me be conservative with it. We have maybe $1.85, but also a little bit more with $6. Um, so that's another dollar. So that could be a $2 upside from this position of where it's at right here. But it has to pull back first because it's overbought on the hour chart. So I would more than likely skip this, but I put in a marker because I want to know what it's going to do after the market opens and it's no longer overbought. So that those are the things. So this helps you kind of weed out stocks. Like, okay, well, do I really want to buy this? Why would I buy this? Okay, it's overbought on the hour chart. Maybe not. Okay, they came out with earnings. Okay, maybe the earnings does produce positive price action. Um, what does the options contract say? Does the option contract give it some opportunity, right? We even when we look at the implied volatility, it's higher than the historical. So I still don't want to buy the options contract on this. I would rather want the options contract lower than the historical. So I know that options is not even a deal. It's a deal breaker for me here. So I couldn't. I would probably have to just watch this run up before it pulls back, and it might do that after hours or in the pre-market. It might go up to $6.30 in the pre-market. It might go to this 660 because it's already overbought. So people are going to probably be trying to selling their shares at 4 a.m. in the morning. So those are other things that will help me eliminate a certain stock. Overstock, another one. All the moving averages are converging right here. I like that. When the moving averages converge, probably just need another day for that 5 EMA and the 20 SMA to really cross above the 200 SMA price. I still won't buy this here, but at least when we start looking at it, we see that the MACD cross, we see the RSI is still near 50, and the TTM squeeze is giving us a yellow histogram. Maybe once that yellow becomes a smaller yellow and then it crosses above the 0 line of this TTM squeeze, we have more upside. But the options contract, we see that the implied volatility is higher than the historical. So I probably wouldn't buy options contract. This I wouldn't even buy yet until both moving averages cross over the 200. It has to cross over the 200. That's when I know that I'm like, okay, you are in play. Now, if I'm a short seller, and if I want to buy put options, then yeah, if it's below the 200 SMA price, then I'm betting that the stock is going to go down. So I want that 200 SMA price to be the reason to push the stock price down. But the minute it's above the 200 SMA, like it was over here, and we see it did this exponential run. This was back in 2020, right? So this was pandemic levels. It crossed over the 200 SMA in April. And from April to August, 4 months, it went from $9 to $128. This is a hold. That's a strong hold, right? You could probably play this several times, right? But as long as it's closing above the 200 SMA price right here, it's too overbought. It's overbought. I couldn't do it. But you could have held it because it's still strongly closing above the 5 EMA. You might be able to even, if you wanted to, day trade it. It's closing, right? And as I'm saying, it like all of this is not it's a science, but not everything is so exact. Like it does this, so it has to do this. It does this, it does one thing, therefore it might do the next thing. The next thing is just a stronger probability that your thesis will work out. Like I said, it's overbought, so it's hard for me to even want to be in this. Like it's once it's overbought, it's tough. but the MACD is suggesting, the TTM Squeeze is suggesting, like, don't even sell it. Just keep on, just let it ride, right? So that would be something that I have to tell myself, like, hey, it's okay. You can hold this, and constantly counseling myself as I'm holding on to this position, because I know I don't like it when a stock is overbought. And because I like it when it's overbought because I know I can sell, but I don't want to lose that profit. So when it's here, I'm like, okay, God, what's happening? Now it crossed here, started trading below the 5 EMA. So I would have been scared around here. Um, but this is still a nice little indicator to know that once the stock starts trading above the 200 SMA, gives us more upside. So that's how I use my scanner to filter out what do I want and what I don't want, or what I want to watch. Right? I know I want to watch overstock. Um, there are some, I would say, there's some SPACs that are out that are in the fintech area that have some upside. So I should probably like start looking at like FSRN. This has been popping up on my scanner as of late. I think for the past week or so, because I remember seeing it back in March. And it still hasn't crossed over the 20 SMA price. So that's probably why I haven't gotten in it, but this is one to watch. It's in consolidation mode now. And as it stays above the 200 SMA and continues maybe consolidating and then maybe crossing over the 20 SMA, then it will give me a chance to say, hey, this might be a buy. I just needed to cross on the long-term chart. We have to use the long-term chart. And if we go into the hour chart to fully support our thesis, we see that is trading slightly above the 200 SMA price. It's not overbought yet. So when it gets overbought, this 20 SMA price is still below the 200 SMA price. So I I don't know if the 20 is going to ever come over the 200 SMA price within the next 2 days. I would rather wait and be confident that it's going to cross over and then buy and then wait for it to run. Because from here, which the lows is $12, right? This is support. $12. We see here, we see here, kind of over here, right? So now we have our support identified. We look at the 5 EMA. The 5 EMA is, let me zoom in a little bit, sorry. The 5 EMA says that 1367 is the downside risk, right? After hours, it traded at 1394. So it's at this near $14 level. So we're not only going to use the 5 EMA as downside risk, we also have to recognize the 200 SMA as downside risk because they're kind of closely together. But even further, we have to really recognize, respect the 20 SMA price. The 20 SMA price is $12.74. So that's almost a whole $1.50 of downside. So I would want to wait for that 20 SMA to cross over before I buy. Because once I know that they both cross over, then it gives me more of an opportunity. And then it's still not overbought. So, you know, who's to say that it doesn't go overbought, that it does pull back, allows some buyers in here so that that $1.50 on the downside does translate to almost $2 of upside, because that's the potential. We have $2 of potential upside. And why I say that, because resistance is here. We see some resistance here on the breakdown. And then we also see some resistance right here, right? This is more 1350-ish, maybe 1340-ish, right? But we still see it there because we can tell that it likes to spike and then pull back, right? It gives us this like fake out breakouts as it tests previous resistance or even previous support. So that's how I would weed this out. But this is something I will still watch just because I know that the banks are all coming out with earnings this week. So that's important. It's always important to know who's in earnings, right? And the banks don't come out until later on. I think it's Tuesday, Wednesday definitely. I think Wells Fargo. Wednesday, Thursday, Friday, definitely all major banks are coming out with earnings. Um, so I would watch FSRV. Um, so does anybody have any questions? Like, is there a potential stock that you want to look at that you might be interested in for the upcoming week? I know I mentioned earlier about a stock that I bought I bought that one by accident versus another one the one that I bought by accident was PRTS versus KIRK, KIRK. I didn't say the other K. Um, the reason why I wanted to buy either one of them is because, as you can tell, this right here, there's some consolidation here. After making a new high, pulling back, they came out with earnings, all this nice stuff, right? They came out with earnings, they did well, they created a new high after the earnings and then pulled back, and then still holding this support area of $25, or $24.50, I should say. It's retesting the resistance, retesting previous highs. Um, it's not overbought. The MACD did cross, and the volatility is below the historical. And we see that there is still some consolidation, right? There's some selling, but if we zoom in, on the zoom in, we see that the histograms are still above the zero line, right? So even though that there's some selling along with this, that these red dots and the histogram are almost like the red dots are saying, hey, there's buying here, but the green, the histogram is showing that there's still some strong buying because it's a teal. It's a small histogram teal, but it's still teal. There's some buying volume. It closed above the 5 EMA. These are good signs. The 5 EMA price is $29.39. Downside risk, $1.50. Right. So I might have saved myself by not buying this, but even though it's $1.50 downside risk, here like I said, close to $31. Right, $1.50 downside risk. We say $31. That's where it's at. The previous high is $33. That's really like $2.30 upside risk, right? Because we're trying to retest the previous high. So say $1.60 downside risk, $2.30 upside risk. Maybe it might be reasonable, but for a low float that tends to spike, I wouldn't mind taking the risk. But if we go into the hour chart, see it's still not overbought, right? It didn't even close overbought. It didn't close making a new high on this time frame. It didn't do any of that stuff, which is always good. That's even better, right? Because once it starts making a new high, like it did here, right? It made that new high on the day chart, and it showed it on the hour chart. It pulled back to the 200 SMA price. And once it pulled back, kind of just held that support. Now it's still trading above that 200 SMA price. Now it's trading above that. It really wants to test that previous resistance at 33.30, 30-ish. Not overbought, still buying on the hour chart. There's a lot of things that suggest that this will go higher. All right. So that's why I actually like this chart. And when I was looking at the contracts, which was more important, I wasn't buying. I was still on April because I still have, when I was looking at it on Friday, I was like, I still have 1 week, meaning that from Friday going into Monday or Tuesday, that's where I want to be with this contract. I still had a couple of days to be able to enjoy some type of upside. I'm not 100% sure which contract I was anticipating buying. More than likely, I would have bought the in the money contract just because I know that it would have had a higher delta, right? 65 cents versus 33, right? 33 cents. So more than likely, I would have bought the in the money. I wouldn't have bought this one because the chances are that it was going to end in the money by before the expiration, which is 5 days. Um, so that would have made more sense to me. So let's compare that to parts, the one that I actually did buy by accident. Still kind of saddened by it, but it's okay, right? The delta is 82. Right? You said, "Damn, Jermaine, you kind of picky. You got a high delta." Yeah, I know. The volume, and the volume is still not in my favor. I have 173 with an open interest of 1800. We see the volume for the more in the money, but at the same time, I didn't want to pay close to $4 for the in the money. So I was like, "Oh, do I really want to pay for that?" When I could probably buy a couple, even though I only bought 2 option contracts. I think I'm down $15 on this. No, I'm up. I'm sorry. Okay, I'm up. I'm up $15. Whatever. I'm up $15. So like, even though I'm up on it, and let's go into the actual chart itself. So when we're on the chart and we see that, I said, okay, well, maybe this might have been a better contract, right? So there was something like the universe was saying that you were buying something probably better, right? Because not only on the day chart, where the theoretical price is $1.76, what was my price again? My price that sorry, my price that I bought was at $1.50. So I was buying the contract. I don't know why it's not showing up on here. Crazy. Why are you not showing now? Well, essentially, I bought it at $1.50. I'm going to the close. I don't know why it's not showing. Um, the arrows, that's what I'm referring to, not showing like where I bought in at. But it's below the 200 SMA price, right? So I said, okay, if anything, I can at least get upside to 226. I could sell at 226, right? Because we know that the 200 SMA price acts as resistance often, right? So, hey, if it doesn't go to $8.40, which is what I would absolutely love, it's not going to happen on next week. At least bare minimum, I could sell at $2.26, maybe $2, right? I have 50 cents of upside. Um, because the theoretical price is still at $1.74. So people are thinking that this is still relatively cheap if it closed at $1.50 or well $1.55. I bought at $1.50, right? So the TTM Squeeze is suggesting that it has some upside. The RSI is now overbought on this contract. So this contract actually, even though I bought it the wrong stock, wrong contract, all of that, I was still looking at the right things. I was still looking at, okay, well, these are the things that will produce an upside for this stock, for this options contract. It closed above the 5 EMA price, right, on the options contract. The 5 EMA price is $1.12. It closed at $1.55, 40 cents on the upside, right? It crossed on the MACD. That's always good. This is the 20 SMA price. No, sorry. Yeah, that's the 20 SMA price. So even with the 20 SMA price, there's still some type of chance that it could maybe go to $44. I doubt that, but the only reason why I would even think that is because, hey, the TTM squeeze is trying to come to the zero line. It's still green dots on that zero line, and the RSI is not overbought, so I still have opportunity. So this will be quintessential of saying, like, look, I could probably hold this until expiration. Maybe I can hold this until Friday. Don't have to worry about it. This is where I want everyone to be at, where they get into a stock price, they buy it near the lows, and the only thing they have to do is just make sure when they wake up at 9:30 and maybe take another check at 10:30, is that when you look at the long-term chart, like daily chart, you see that it closed above the 5 EMA. Long as you know that it closed above the 5 EMA and you come back at the end of the day, like around 2:30 or even at 3:30, and you say, hey, it's still above the 5 EMA, then you don't have anything to worry about. All right, you can wait until the next day. Like this is ultimate long-term trading. This is where you'll get, and I'm gonna put in the group where you'll get videos from more experienced traders that I've learned from, like Tim Sykes, where he's a short seller by heart, where you'll see, like, he will talk about these are breakouts. This is a downtrending chart. Start to get used to identifying breakouts. Right? Maybe this might break out, maybe it doesn't, but at least you're protecting your downside risk. Like I can lose $50 and call it a day, right? Because it didn't do what I wanted to do. But if I know that I'm minimizing my downside risk and I'm $50, my next trade, I can, continuing following this strategy, could be a $2,000 win, a $500 win, $400 win, right? So the thing is that you just want to make sure that you're using the strategy so that you're comfortable in what you're buying, and you're not just rushing because someone alerted it to you and say, oh, because they alerted it and it's moving, I need to buy. If you feel a rush of adrenaline before you buy a stock, you're doing too much. You shouldn't feel any rush. It should be as systematic as, turning on the water faucet and knowing that water is going to come out. Like you just use your hand, turn on the water faucet, water's coming out. You're not going to, are you going to rush now to get this open? So maybe you want to rush because you don't want to waste the water, but the next process, I want to get some soap. I'm going to wash my hands now. Okay. I turn off the water. I'm going to dry my hands on the towel. Same thing. Okay. The stock is trading near support. Where's the EMA? Okay, on the daily chart, the EMA closed above the 5, the stock closed above the 5 EMA. Okay, where's the volume? Is there volume? The volume is key. There's volume. Where's the volatility? Is it below the historical? Okay, it's below the historical. Is it below the theoretical price? Okay, it's below the theoretical price. Is there a green candlestick? It's a green candlestick. Is it overbought? Is the momentum changing? So yes, there are moving parts. That part I can't control. The only thing I can control is that it's above the 200 SMA and the stock closed above the 5 EMA price. If I can see those two things, then I can line up everything else. And everything else that you're lining up, you want to make sure it's in your favor. And if everything else is not in your favor, like it's overbought or the MACD then across, then don't worry about it. Don't look at something else. There's plenty. There are plenty of other stocks to trade. Plenty. Like there's endless, and it will always be there. So don't feel like you always have to put in a trade. Like all of these stocks, I'm not trading all of these. There's no way. It's impossible. Like, well, I shouldn't say it's impossible. Anything's possible, but there's just too much. And I have other stuff to do in the day, right? You have other stuff to do in the day. But if I see that there's a stock that has potential, I'm going to highlight it and I'll put it in the group and I'll say, look, these are all low floaters. These are why I trade them, because I know that in a day I can use an options contract find the run, allow it to run for, typically until 12:30. But once it's overbought, I sell. So that could probably happen at 11, right? But at least you only use 90 minutes of your day to buy this stock, to sell this stock, to make your money, and to move on to whatever else you need to do in the day. Maybe you have to, go take your child to a physician's appointment. Maybe you have to, go see family members, or maybe you have to do something else. But as long as during that 90 minutes, that time that you put in on that trade, whether it's for that day, you already had your plan. Like, this is something I want to hold a little bit longer for a couple of days. This is something I want to hold for an hour. This is something I want to hold for until the end of 2021. Sheesh. Don't want to relive 2020. So, this is just a strategy that helps. Crystal really put it into mind, when she said, once it's over the 5 EMA, it's going up. Once it's below the 5 EMA, it's going down. That is as simple as it gets. If it's trading above the 200 SMA, it's bullish. If it's trading below the 200 SMA, it's bearish. Those are two quintessential indicators that you should really hold on to, because those help a lot. So I know that you see all the stocks here, but do you have any stocks that you're interested in, that you're not sure of where it could go or what it can do for the upcoming week, or anything that you're interested in that's stock related?
What is it exactly does it mean when you by having a low float or a high float?
Yes. So over here, I know you can't really see it, so I'm going to extend it out just a little bit more. So over here on my watch list, what I tend to do is that not only do I have the percentages, like what it did on the day, let me just move it all the way up. Not only what percentage to how it moved on the day, but I also keep the volume and shares. Shares on Thinkorswim means the float, and the float means the amount of shares available for that is traded by that company on any day. So on any day, BTX has 41 million shares available to trade. Out of that 41 million shares, you have 4.7 million shares that exchange hands throughout the day, right? Meaning buying and selling. So these shares, or the float, is very important, right? Because you will have a company like, let's say Facebook or Disney. I probably don't have it in here. Actually, let me go to the stocks that are above the 200 SMA, right? So this is a combination of low floats and high floats. So when we say low float, we're thinking of something that is below, at least 30 million, right? But there are some low floats that are like, it could be like 60 million, 80 million. I don't consider 80 million a low float, but technically something like 10 million, that's a low float, right? And then you have short sellers that are a percentage of this float. So, and when you do the research on the company, you will see that it will say short interest, right? Or short percentage. And whatever that percentage is, if it's like 2%, 10%, 20%, you're just taking a percent. You want to take the percentage of the float in relation to the short sellers, and you say, well, this is the amount of short sellers that are available, or at least the shares that are available for shorting. So let me take that into my math equation mentally, when I'm thinking about the volume, So let's say that OEG, which I believe is an energy stock, has a short interest of maybe 20%. So of this 46 million float size, 20%, which is roughly, that's 1/5, So 1/5 of this is, I would say, roughly about 10 million shares. That's about 25%. So it's not 10 million shares, maybe 8 million shares is about 20%, right? So I didn't go back into their statistics to understand or to know what their float size is. I'm just saying roughly, if we did the research and say it was 20%, it'd probably be about 8 million. So we'll have to think, oh, it only traded 800,000 shares. Somewhere in there has to be some short sellers, and there probably still shares that are available that people didn't trade on the buy side or on the sell side. So you have to take that into the equation. So that's why the float size is always important, because on the low floats they have chance of spiking, right? They have a strong chance of spiking. This is a low float, SPRT. What happened? It spiked, right? Went from $2 to $10 in a day. That's why I like low floats. And then using the low floats with the options give you an opportunity for higher upside like this, right? SPRT was a support com. It has options. It has options available. Would I trade this? No, it's coming down. I wouldn't trade this at all. Not right now, at least. But that's what I mean by low float. This is a relatively low float, 23 million.
Yeah.
A higher float, RXT, I think that's a pharmaceutical company. That's 206 million. That's a higher float. And this does have potential. Like looking at it, it looks it wants to break out. It's not overbought. None of that stuff. Maybe it does. I think this was on the Reddit board before. It looks like it wants to break. It made a new high, but before it goes higher, it's going to test this 20 SMA price. If it doesn't hold the 20 SMA price at $25.70, then it's going to try an attempt to come to this 200 SMA price. But there's a healthy support around $25. So that's something to look at. Pfizer, which I wish I bought back in, or at least was halfway patient, is a higher float. But because we know with the news and stuff like that, this has opportunity of going higher. I was waiting, I don't know how long, for both moving averages to finally get over the 200 SMA price. And it finally did. But I sold it was either this day or this day. I have to look at the contract. It was one of the, if it wasn't this day, I know it was definitely this day, because this day was showing some signs of pulling back. So those are, yes, thank you, James. Listen, I know James comes in, he's more of the crypto guy, and I if you are into crypto, and I know he likes ARK, he likes technology too, so I shouldn't just say only crypto. I don't want to put you in a box. I hate putting people in boxes. But he's very intelligent when it comes to knowing like the backstory. He'll give you like the backstory and say, look, this is some good news right here. You might want to pay attention to it. So I always look forward to whatever James has to say when he's willing to share. Obviously, I'm never going to force anybody to share. But Pfizer has upside, has exponential upside, and like I said, I knew that this moving average, the 20, was going to come over. Finally did, but this has a higher float across above the 5 EMA. The MACD is finally changing. Yeah, it showed a red dot on the x-axis, but it has more upside. Strong volume, like it has more upside. So if it does pull back to $36, or hopefully it will hold 36.50. If it holds 36.50, I might rebuy the contract, because this has upside. But I think it's overbought on the hour. Let me just double check. No, it was overbought, pulled back. So it's just trending, but the implied volatility is already high. So I would have probably, well, it's not higher than the historical, but it's up there. So I'll probably have to wait for some type of pullback, but this is going to go higher. Um, if it doesn't test 37 this week, I wouldn't be surprised if it goes next week. But they did get some. They're doing some FDA things too. So I know they got some FDA clearance, so they should go higher. But this is a higher float. That was my point. Um, and I still have it highlighted, so that's even better, right? I know at least I'm following what I think. So this is at 5.5. What is it? Billion shares. Billion shares. 5.5 billion shares available. That's on the buy side and on the short side. I don't know. I don't remember short float. And it traded 31 million on the day. Right. So you know it's going to take a lot more movement for this stock to really soar, to really spike on a day, versus a lower float that won't take as long. It will just probably take a day or two. That's no, not LO. That's Lowe's, which is another good one. I think.
So
Lowe's.
you like low floats?
I absolutely love low floats. That's all I typically trade, and my whole scanner is about low floats. That's my whole scanner is centered around low floats.
Okay.
Let me show you again. Let's go to the scanner here, right? We have the shares, right? I have 2 million. The max 80 million. So you can move this. You can move, this all together. But I also have the volume at 200 million too, right? Just because I know that once some of these spike, they get crazy volume. But I also have a low of 500,000 because I know on average a low float is going to trade around 500,000, and until it gets that necessary spike, strong candlestick. So yeah, I
Okay.
focus on low floats.
All right.
I definitely do. Any other